And we're live. Thank you for joining us. We're Farmers in Finance, and welcome once again to episode 8, what it looks like to own your own bank. Well, this is going to be a good one, right, Gaurav?
Yeah, awesome. I was waiting for
Happy,
this.
happy Diwali, by the way.
Happy Diwali. Yes.
Am I late? I'm
No,
late
no,
now,
no.
right? No,
No,
still celebrating?
we have Bhai Dooj today. So the extension of Diwali.
Yeah,
Yes.
that's good. Welcome to Farmers in Finance. My name is Ricardo Banazza, and I'm a former farmer. I'm a real estate agent. I'm a financial service associate, and I'm here with my good friend, co-host Gaurav Malik. We're here to help you grow some crops because farming is more than hard work. It's also smart work, right? So today's episode is one that I've been really looking forward to. Well, the last 2 episodes, it's what I've been really looking forward. So we're gonna
Yeah.
show you actually what it looks like to own your own bank on a day-to-day sort of basis. Well, year-over-year basis.
Generation over
Again,
generation.
hey,
Generation over generation.
generation over generations, yeah, and maybe we'll give you a little hint here and there, hopefully.
Yeah. No, we will
Um,
be able.
if you watched our last show, we talked about why farmers need to think about this project, and they need to think like bankers do, because at least they know where their finances are coming from. So today we're diving into what that really looks like through real stories and real numbers. Well, the stories are not really real, but the numbers are. The numbers don't lie.
Numbers don't lie.
So for today's quote of the day, we have every farmer already runs a bank. The problem is most of them don't own it.
They-
That's
Exactly.
Richard Canfield, which is a very good friend of mine. I was on his podcast, Wealth on Main Street, another podcast that if you're intrigued by these podcasts, is another podcast to watch because he does a great, real job about consulting people that are putting this system, be your own banker, into practice. So he's got a wealth of information, beautiful site, and totally highly recommend it. And you can watch my show and my interview with him as well. So to me, this quote means that already we have money systems, and they move, especially with farming, like when you're buying equipment, when you're planting seeds, when you're buying gas, getting insurance, all the products, they require money. So money flows in. You plant a crop, whatever that is. If you're milking or if you're planting seeds and having ground crops, you are having expenses, you're having sales, and you're having investments, right? So the question is for today is who's capturing the profit from that movement? You?
Or the bank.
It's to you.
Oh, is your internet okay? I saw you like here.
Yeah,
Okay.
yeah, I snapped out for a bit. Yeah.
Mm.
We're live, by the way. So
Yes.
did you catch that question? The question was for you.
No, I didn't got it. You hanged in that moment.
Okay. Yeah, what does the quote mean for you? Every farmer already runs a bank.
So basically, in ancient time also, we used to own banks in India in terms of like seed bank, wherein we used to sow it, keep it, and for different varieties, different years, we used to make different jars or like different batches for to grow it. But slowly and slowly, we started to depend on these seed companies, and then like seeds are like money, pretty much same like we discussed before. So they were owned by these big corporations, seed corporations. If you talk about money, the big corporations and money are banks now. Earlier there were no banks. There were like not a system in which you are fear of losing money, so you save somewhere, and then you don't know where to get the money, so you go and get your money only, but you pay interest on that. So every transaction we were doing within families, like big families, they went outside to other seed companies or to the bank. So uh, if farmers are able to catch this, the problem, especially in India, and I think the same problem will be in Canada, that people nowadays, that farmers don't create wealth. It's just a survival game now. They survive, and even if you talk to a big farmer, they say that we barely survive. It's not because that the crops are not good or bad. They are like some any other business. You will have a constant demand, but there will be some bad years and good years. But typically, people don't prepare for it. And most important thing to prepare for any such event is basically preparing for the money. And preparation of that is being able to own the system of money, which we in lame language we call bank. So instead of transacting with someone else, create your own bank. That's what we will be discussing today.
Yes, beautifully put. Yeah, it's a hard struggle for farmers because as soon as they get a bad year, like bad weather, there's so many factors, and that's why most insurance companies don't insure, right? Like the crops, because
Yeah.
it's a highly risky business. And then you were talking about last few times how farmers face, even in financing, they face such a higher rate because it's not a guarantee, right? Like, and they have a short season. Well, here in Canada, it's a short season compared to what you guys have, but you guys get pretty hard rains as well, right? So,
Yeah. Yeah.
and you got to plan for that. That it's a matter of when, not when what, you know. So yeah, we got a presentation here for you guys today. Um, so what it looks like. So what we're going to show is how to turn the farm cash flow into your own financing system. Yeah, we went through the quote of the day. Beautiful quote for today. So what we're going to talk about today is why control matters more than yield. It's important to control your system, your money system, than actually what the yield is, and we'll show you how. And so we'll have two case studies. One is about a legacy farm, so it's a father and son build their own bank for the future, for the legacy, for the grandchildren. And then case two study is an expansion farm where a young couple growing ground crops grows through their cash value because every time they purchase equipment, they create more cash flow. So we'll show you that. And then how the money flows, understanding the policy loans and repayment, which is very critical here. It goes back to the story, don't take the peas out of the back door. And then we'll have a question and answer section where we can have chat about what it's on your mind. How do you see this applied to your system, or what intrigues you? And if we don't have questions, because obviously we did this show not in our scheduled time due to unforeseen events, we'll come up with our frequently asked questions, and then we'll show you how the next episode tease how to structure your first policy the smart way.
Yeah.
So, yeah, moving on. What it means to own your bank. Oh, I went off again. Did I?
Yeah. There was a glitch, maybe. No, that's fine. You can repeat.
Yeah, I'm at the office right now in Penticton, so
Oh, okay.
I
Your
never
home
tested. I never
That's
tested the internet over here.
Oh, the streamline is heavy, person. Heavy. That's why.
Yeah, the StreamYard is for sure. So control is greater than yield. It's not about earning more, it's about owning the process. And that's what we're going to show you is you earn money, you save it, and then that saving keeps growing, and then you borrow, and then you repay the loans, and then you repeat. And then in the end, you're prosper because it's about owning the bank, owning the system, and having models to follow. Because people have done it before. There is no new invention, no new tricks. It's a proven process, and it's pretty simple to understand. But the paradigm that we live in, and I'm taking a quote from Nelson Nash, it's hard to concept and visualize because we grow up with the bank. It's like it's our first financial. As soon as we get money, where do we go? We ask our parents, "Hey, let's go to and open up a bank account." That's what happened to me.
Even if even it's funny that if you see our curriculum books, when they talk about finance or any financial institute, there's so many other
Yeah,
financial institutes. The first picture you see in your book is a bank. That's it.
yeah,
They don't tell you about money. It's just like bank. Money means bank. So, and that's
yeah,
the conditioning of our mind all the time.
yeah, yeah. I agree. I agree. It's like it is a condition. It's a as the Matrix, my favorite movie. Once again, it's a program.
Hmm.
and and in order to see the programming, I think you got to put yourself into action and then apply this, and then once
Yeah.
you see it, then you get the confidence. And that's what I did. I was totally reluctant at first. When I first heard it, I was like, nah, this is not possible. The bank wouldn't allow this. This is
Yeah.
this is something. They have way too much control. Like if everybody did it, what would be the need of the bank? Well, that's exactly it. That's why we're here. We're here to educate and to teach you the process of what it looks like. So why don't we just jump in? What do you think?
Yep. Let's do it.
Oh, look at that! I can do the scans. Oh, that's awesome. Okay, so our first case study is the legacy farm. So a father and son build their own banking system, and we just went off. Our numbers were Farmer John. Let's go and call him John again from last
Hmm.
episode. Farmer John. He's 45 years old, non-smoker, and they own a grain farm, and he was introduced to this system, and he just was skeptical again because he's a farmer. Farmers have a mentality of like, I've been doing it for so long. My grandfather did it for so long. Why would this work? And so they're skeptical in actually applying it. But once they apply it, they're very strict because they understand how to be disciplined. They have learned how to be disciplined because they have systems in their farm, so it wouldn't be that hard to change over the system into this banking system, right? So what we set up here was a policy where the premium is just around 40,000, and what they actually have to pay is $5,500 in insurance cost, and then the rest was in investment, the investment portion of it. We added a term 20 to protect John until he was 65, so that in case an event happened, he was protected and he passed on. So we put a death benefit of 2 million, and you'll see here
Hmm.
was the actual policy itself. Sorry, we just missed a little bit there. Probably I saw my
Yes.
screen.
Yes.
Okay, so then year one, we have a deposit of 39,700. John managed to get some cash flow and put it in here and establish the policy. And first year, his cash value is at $33,000 with a death benefit of 2,150,000. So that's pretty good at 45, a non-smoker. Okay. So as we see the years progressing, we look at year 3, where we have a total cash value of $107,000. Now we have put 39,700 times 3 into the policy, and the cash value, or the death benefit, I mean, has grown to 2,280,000. Now, Farmer John is looking into testing the system. So he says that I want to buy a baler. I mean, a grain baler. So he can take his straw to the market and sell it for more money, for bedding and all that stuff, for animal bedding. So he takes the loan out, pays cash for the baler. So he gets a discount, because whenever you pay cash, you have more leverage, right? And
Yeah.
so
It's just like when you're paying the dealership, which say that, okay, I will get this money right here, right now. They will give you extra discount, like up to 3 to 4% CD. We call it CD discount in lame language, the cash discount.
yes, and that's everywhere. Every time you buy a car, you can. Every time you buy a house, all cash. Like you could put in a better offer, right? Like no subjects,
No
or
subject.
even when you go and try to bargain, it's like, I got cash right now, and you show the cash. People get attracted to it, right?
Yes,
It's like
cash is king. That's what I
cash
say.
is king. That's right. So, as good financial advisor, we help John to set up a system of repayment, and we instruct John, hey, you better pay this off in the next 4 years. So we give him the structure of do a loan repayment of $17,300 a month. I mean a year, to pay off your baler. So as we can see, the baler cost, the loan balance keeps going down. But let's take a look at the cash value. The cash value keeps on growing. That's the power of the infinite banking system. As you pay the loan off, you can actually make the repayments higher. So you can take, like what Gaurav was talking about. If you're getting charged 18% at the bank, and your loan interest, to be on the safe side, let's say it's 8%, you have a 10% difference. You can take that cash flow that you were already committed, the 10% committed to paying it to the bank, you can put it into your premiums payments. And then your system will grow even faster without even any issues, because now you're taking that cash flow. And that's what the infinite banking system is so powerful. And the other superpower, I believe, is that the cash value keeps on growing. And so then by getting the dividends every year, you're going to have more value that you can borrow against or just leave to your family, right? So when we see the cash flow growing, we look at year 10. Now the loan of the baler is paid off. You have a 338,000 cash value, and your death benefit is now close to $3 million. I don't know about you, but what other system has that capabilities?
It's like, if there's one more point we missed here, because when he bought that baler, John, he bought it for
Yeah,
cash. So let's say there's something wrong in third or fourth year, like farming. In farming, some things happen. There's a drought or something like that. Something
yeah,
happens. He doesn't have to worry about the EMI. Let's say he can pause it here, okay. But if it was a bank would have come after his baler. Without bailer, he would have been in bigger troubles. Like that's what happened in India. Like we say, uh, it's a Hindi proverb, uh, "Kangali mata gila," which means when you are poor, the things are more tough. So when things are actually more worst, the things get uglier at that time. So just
There's a
imagine for
theme
a
for that
farmer,
too.
yeah. So
When it
if
rains, it pours.
when it rain it pours. So when if you see, when he's not making money on his own banking system, he need not to pay it back. He can take a pause on the repayment, even on the premium as well. Let's suppose it's the sixth, 7th years, something happened. He doesn't have to worry about like repaying that one. He can shift it to next year or maybe next year. If he need more money at that point, he can take more loan from there. That's a beauty. And additionally, he doesn't have to worry about the bailer, which is the source of money right now, because he betted that $80,000 on that bailer. Let's say something happened that year, and the loan was for 7 8 years, or because farm equipment are expensive, they go for a bit longer time, so it might be 10 years. So in 7 years, when he paid only the interest part, still the principal left, the banker will come in and they'll take the bailer. That's the last thing you need with a drought. But with your own banking system, you have bailer on your own name, paid cash, so you don't have to worry about like your source of money will be somewhere, will be taken by someone. You don't have to worry about your repayment because you can delay it. That you already have a lot of cash value. Let's say you don't want to break the premium, you can take a loan again from you the cash value. This is 285,000 only for 1 or 2 year. You pay the premium back, and once the things are good, then you pay the loan again back. So this solves pretty much every dark area or every concerned area for the farmer, and that's why we like it. It's not about money; it's about the control, and that's what they say. You have money brings control. Money doesn't bring anything else. Money actually brings control. If you are in control of the money, you are in control of your life. And here we are talking, be controlling, have control of the money so you can have your own bank. And it defines not only like repayments, loans, but it changes all the game. Like pretty much everything which a farmer could say that it can go wrong, we can make it. No, we got it. It will go as per what we want. External factors will not affect my banking, my finances.
Ah, man, I couldn't have put it better myself. I mean, that's what we're talking about. That's
Yeah.
the control. And then even if you think about stress too, like how farmers are like, well, if they take that baler off, you lose that income. It's not just losing the baler, you lose the income, which is creating more cash flow for the farmer that he could reinvest into his banking system, because this can grow. You're not limited to just having one policy. You can have multiple policies, and you can have the policies on your children, and you can
Yeah.
teach your children how to use those policies. And that's where the legacy comes. And
Yeah.
then when we were chatting the other day, Monday, you also said the creation of the trust. Now you could even have a trust which governs all this and says, let's invest the money from each policy towards other policies and grow the family's legacy. That is a powerful point. And a
We
lot
will
of
cover
people
that part in
miss
depth
it.
next. We'll cover that part in depth next time for sure.
Oh
Even
yeah.
for like how you can do it through your wills, or maybe like trust, if you want to do trust, or how to educate basically. Like you were mentioning the other day, I was so happy that you were teaching your kids about like whole life, about what is saving. Like if we teach even to farmers and they can teach their son, that's also legacy created. You don't need to go for trust and everything. It's just a knowledge transfer. Trust just makes sure that everything you taught is being followed. But if you are a good teacher and your kids are good students, they will never fail the system. They will have that waterfall method working for themselves for generations to
Yeah.
come.
Yeah, I mean, like me having on a farm, like we used to have a ground crop farm. We have such a technology. Like if I had this system in place, I could have bought, 3 or 4 greenhouses and just had a little bit more control even over the weather. Like it could be
Anything.
like, yeah, and then that would have yielded me more crops, and then I could
More
have
money,
sold more seeds, more money, more cash flow, put it in less
less stress. Oh, you hang
seeds.
again.
Yes,
This was a long one.
sorry about that. I'm
No
gonna
worries,
get
no
it
worries.
all wired in next time.
Yeah, no worries. That's fine.
Okay, so that is
Continue.
that is a very passionate point, but yeah, we could talk for days here. So, having paid the baler off, Farmer John now decides to actually buy a piece of land. He wants to purchase 20 acres close by so that he can expand his farming operations. And he looks at his cash value, and now that everything is paid off, he's got $452,000. Talk about safety or a line of credit. Like what bank would give you a $452,000 credit um, that you can just control yourself? I don't know. I don't know of anybody, but if you do, please leave a comment. So he takes out a loan of $100,000. This must be in Saskatchewan somewhere. John is from Saskatchewan. I don't know. That's probably an acre here in the Okanagan. But
Yeah.
anyways, jokes aside, he decides to start the loan and repayment back. And guess what? His cash value keeps on growing. Year 15, he's still got to pay off the loan and continue on. And at year 20, this is oh, another point that we made in this policy, we made it up to pay to year 10. So after
Yes.
year 10, the farmer doesn't pay any more of the loans. These premium payments are coming straight out of the cash value, dividend paying. So we're not seeing as fast of a growth after year 10, but it's still growing
Yeah.
because the policy is getting paid on its own. And uh, you're covered, and you look at your death benefit, almost close to $3 million. I mean, that's unbelievable. I would say, like something that just worked on its own, and you can loan out of it $617,000.
And
And
main thing, if you see, the death benefit after only 20 years is this much, okay, and uh, this will also serve as not a way to transfer your, like, he's already transferring 20 acres of land and a bigger farm system, which is the
yeah,
legacy, not one. But bigger the legacy, bigger are the taxes. That's the
that's
reason so
right.
many people don't build legacies in Canada, because they fear of taxes, or sometimes they don't know. They at the end moment they don't have anything to plan for that. But if we plan already, even after that 20 acres and all the farm equipments, everything, because it will be a capital gain for the next generation to come. What will happen? This amount will act as a tax barrier and will set off the taxes incurred on purchases of, like, land or other assets what he's transferring to his kids. So by this way, CRA won't touch anything to the estate or to the legacy, which is the real one, and part of portion of it will go to whom? To the CRA as taxes, your capital gain taxes, and the rest comes as your working capital or their kids, as per the defined rules, which the money they got, they will start putting that money in their own life policies.
On life pause.
So
Beautiful.
let's say
Yes.
it it's 1.8 billion, three kids, 600,000 each, $600,000, a whole life policy. You can imagine what it will do for them for the next 20 years.
And sorry, yeah. but this is year 20. So Farmer John is only 65.
Yeah, the numbers
So
are much bigger. It might be
much
when he's 85.
bigger.
Yeah.
Yeah, he's probably going to live a happy, healthy life because he's been outdoor. He planted great crops,
Yes.
stress free. So he's
Yes.
probably going to live to 85, and
Yeah.
still the death benefit is going to compound until the day he passes. And then, yeah, obviously this is a pay 90. So at 90 years old, the payments on the premium are going to stop, and then the policy is still going to grow another 100 years. And if he makes
Maybe.
it past 100 year, he gets to enjoy.
Oh, you again hang.
Oh, we just broke out again.
Yeah.
Much more than that, like $4 million, and he could take go over his
Mm,
bucket list and
no,
just
I think I'm just calculating how much he will have. Just give me a moment. At age of
yeah,
85. Okay. I'm just doing
yeah,
the numbers. So we can tell everyone that how much he will actually leave as a legacy when something happens as 25. Okay.
yeah,
I'm just
yeah. But
doing it.
yeah, like you said too, you're leaving a farm, and obviously, if you keep on growing and expanding it, and at death, you have to pass it on, and the capital gains they're sort of expected because everybody should know that CRA wants their cut, but they're
Mhm.
unexpected for the family members. And that's another thing that I am sitting down with my kids because they have to understand the paradigm that we live in, right? How
Yeah.
it works and how the system works. And you
Mhm.
have to have these type of protections in place, or else everything that you worked all your life for, because we could have done a parallel study of farmer Jeff, that he's like, no, I don't believe in it and I don't want it. And then if you look at his investments, if he would have any, um, he would have to tap into them at retirement, and then at retirement, and then they would drain, and then they would disappear because then he doesn't have anything to leave, and maybe possibly leave the farm. But if
Yep.
you like, this is another part that we don't feel it, but a lot of farmers are having problems passing the farm on because the kids, without the system, I'm saying, the kids are seeing how hard their dad works, 13 hours, how stressful he is, how many money problems. And he's like, hey, why would I want to take on that? Like, why would I want to do that? And so then these legacies are actually stopped, and in sometimes in brutal cases, farmers are just like killing themselves, like what we spoke in earlier, the
It's so
suicide
common, man.
rate.
It's so
It,
common.
it's so common, but guess what? The media is not going to talk about it.
No.
Everything is fine. Everything is great. Yeah, we have food shortages. Well, of course, we have farmer shortages. We don't have food shortages. There's plenty of land. And if you look around, there's plenty of land unused anyways. But yeah, like that's a really big stinger. Um, okay, so let's move on to our second slide. Let's see if I can do this right. Did you calculate that?
Yeah. If he keeps running, just 1 minute.
Whoop. Yeah, here we go. Stable internet next
Ah,
time. Check.
5.8
Okay,
million.
$5.8 million.
Yeah.
Wow, that's crazy. Ah, just blows my mind.
Hmm.
Blows my mind that people don't know about this. The expansion farm, case study 2. Young couple builds and grows through their family bank system. Let's call these Farmer Ron and Katie. Ron and Katie are 35 years old, and they own a small boutique farm, and they have a smaller cash flow than our farmer John. And so we set them up on a 21,000 premium. What they have to pay for the bank is 3,600, and what they have left over for investment is about $17,000.
Okay.
So they managed to create this cash flow where they say, we make about $60,000 a year. We're willing to put 30% of our savings into this banking system, because we assure them that they can, grow their cash value and take it out at an opportune times when they need to expand. So they start the system, and the system we also put in a $1 million what should we call it, term 20, so that they're
Mm-hmm. Oh, here you go again.
that is part of the premium section. And so they started growing the policies, and they grow their dividends. And on year 3, they come to us and they say, hey, we need a cooler, a cold storage, and we want to do some irrigation upgrades so that we don't have to keep switching the sprinklers. And we want the cold storage so that we can cool our salads right away, so that we can take them to market fresh, and we can actually extend their life. So that this will have a great impact on our time savings, and also on our product life, because we're organic farmers. We don't use any chemicals, so that we can grow and have a market and have a niche in that sense. So we're like, okay, yeah, that's great. Let's set you up and have this loan for $30,000. You have a cash value of 57, and so we can definitely do that, because you're only taking 50% of your cash value, and you still have money in the event of, to cover up any future issues, problems, maybe like the weather or anything like that. And I feel like if you put 7,400 as a repayment, you'll have the loan paid off in 5 years. So they follow our suggestion, and in 5 years they have paid their loan off, and now, and their premiums, and now their cash value is $181,000. Their death benefit is $1.6 million, and in the policy, what did they pay in the policy? They paid 21,000 for 8 years. They paid $168,000. So at year 8, they have invested $168,000, and now they have a cash value of $181,000. Just pause there for a moment. How beautiful that is. Let us thank him. They can get more out in money, interest, having it paid cash, and of what they put in as an investment. And that is, again, the power of the system.
Of the
Now,
system.
of the system. Plus, they have increased their cash flow. They are owning the cold storage, so they don't have to, they control their banking system, they control their repayment. And like Gaurav says, any emergency, you can suspend and continue on and adjust and pre-plan. And that's what it takes to be your own banker. You just adapt to the times, adapt to life, and it gives you so much flexibility, as long as you have consistency. Now, they came to us and they're like, there's 5 acres for sales, and it's great land, and it's perfect. It's right beside our farm, and we can expand. And this would create a cash flow of, like $50,000. This would increase our yields by 100%. We need to get it. Can we get it? And at year 9, we look at their cash value, and it's $210,000. So they said, well, if we offer cash, I'm sure we can get it for $80,000. And you're like, go for it. Why not? And so we set up a system again of paying it back over the years, $18,000, and still their cash value is still growing untouched. They're at $242,000 a year 10, where they stop paying the premium because the dividends are paying for itself. And their death benefit is 1.750. So you can see here, even with this case study, like we can help all sorts of people, all sorts of budgets, all sorts of events in life, all sorts of businesses. This doesn't have to be applied just to farmers. This can be applied even into real estate. Like
Anyway,
if you have an investment, or you want to start your own short-term rentals, and you see a property that, wow, like I could rent it. I mean, you could rent a property, tell the leasehold, I'm going to do short-term, and then create value, create cash flow, invest into your policy, and then one day, once the cash value is big enough, you can buy your own property. And
yep.
and that's the power of leveraging. That's the power of creativity. Any ideas you have, even if you're an inventor. Oh, I gotta go and get financing. Oh, it's so hard out there. Guess what? Start a policy, whatever you got. Like work at UPS for a while, make some cash, save it in, and then invest it. I don't know, whatever you have, right, Gareth?
Yes, and one thing I would like to mention over there, some people debate with me that okay, I will have this, I have more than this kind of money if I invest this much. So I'm just clearing out 2 3 points here. One, you have a limit on TFSA. Other than TFSA, whatever you transfer to your kids is under capital gain taxes. It will tax at 50%. So whatever you will make, you will lose 50% of that. That's one. Second thing, let's say you started this policy with good intentions, but life is unpredictable. Something happens to the farmer in fifth year. Normally, how much you would have saved? 5 into 20, $100,000. But with your own banking system, we made sure that we have a coverage as well for all the risk I can pretty much imagine. Like if something goes wrong, everything is on loan, that it will be sold. Your house might be at a problem, your kids will be on the road. But this will save everything out, because within 5 years you still have I will say a lottery of 2.2 million or $1.8 million, which normally you can't save even in 5 10 years, because during that process also we're talking about putting it as a saving, taking a loan, leveraging that. But at the back end we have a strong backbone of insurance. Something happens during the plan, your insurance comes in handy and it will save your family. Which normally if you put your money in TFSA, you put money in the bank, something happens, they don't get anything. The money in the bank will be subjected to capital gain. Let's say you saved 100,000, you'll be left with $50,000 only.
That's right.
And that's the first part. That's why
That's
people
right.
need to understand money. It's not only about having money in the bank, but it's like how that money system, like that banking system, should be owned by you. So something goes wrong, you live longer, you are not you there's some bad days, something happens, you're covered for each and every situation.
Yeah, I mean that's so powerful. I mean, like it's just, and the assurance that gives you. I mean, when I started my own, I was like, okay, my kids are protected now. I don't have to worry anymore about that side of things, right? Like it's just
Exactly.
you have a better look, like less stress. Subconsciously, I think this affects people, and it just, you won't experience it until you do it, right?
Yep.
And that also brings a story about my friend, the farmer. I won't mention the names, but he's a very famous farmer here in the Okanagan. They've been doing it for 30 years, all their life. They grew up on it, and he's always struggled. Every year it was a struggle because um, the crops come in, you get busy, spring is over, farmers market starts. It's amazing, like flowing. You're talking to people. It's energy, right? Like you keep going.
Yeah. Sun is
But then
out.
the sun is up, right? And then over time, you go and you finish and you get to the fall, and then it's like, yeah, you got to prepare, you got to store everything, you got to winterize, so everything's got to be, like you got to change the oil, you got to make sure everything is heated, in garages and everything like that. So now you have this income change, the cash flow stops almost, like you can have a little bit of off sales, like with the dry stuff and oils and whatever you have. I mean, we become creative in that sense too, but cash
Mhm.
flow, half itself. So he's always struggled because he's starting to, the expenses have not changed too much. Actually, they're starting to rise because the heating cost for
The gas for the tractors or for the farm equipment, the diesel is expensive.
yeah, all the expenses are still there. So he now is tapping into his line of credit. And now his line of credit over the winter months gets to almost the limit. He's talking about, yeah, I have to borrow like $25,000. And all of a sudden, he starts to loop again.
Yep.
So,
Every year it's same.
and every year is the same. He can't change because he doesn't know, right?
And all the
And
profit he's making, he's actually giving to the banks in terms of interest on line of credits.
not just that, what we just talked about. He's giving away the interest, he's giving away his money, his cash flow, he's
Compounding.
giving away the
Compounding.
compounding, the death benefit, his legacy. Now, like, why would I want to do that? Like if I was his kid, I was like, why would I want to do that? Right. So
That's the thing. If I see my parents struggling doing something, I will never do that. That's why there's so many farmers which are leaving this profession and going out and doing a normal job in a big city. They don't want to be a farmer because they think it's a uh, bigger struggle to be a farmer than to be in a city and work 9 to 5 job. They don't know what's bad out there. Like it's even worse. But it's just like you make assumptions as per your experience and how you grow up.
that's right. That's right. And this doesn't just limit itself to farming. I mean, this could be just as easily put like a restaurant business. My brother is a chef, so he's always struggled with the winter income because obviously people like don't go out as much. They stay at home, and then there's Christmas holidays. Nobody goes to the restaurant at Christmas. Like there's different ways that you still have the staff, you still have the expenses, you still have the rental, or if you own it, the mortgage of the
Yeah.
restaurant. So you still have the costs that you're paying for it, you're paying interest on it, and
Hmm.
you're not controlling it. Like if something happens or you have to renovate the kitchen, then you start losing that cash flow, right? And that can cripple, restaurants, and then they can't provide the same services that they would, you know. But having a proper system like this, like a banking system, and it wouldn't be so hard to run because if you already run a business, it's pretty easy to run your own bank at just as much, right?
You
So,
just need a good advisor like us by your side. That's it. Not that difficult.
yes. Not that difficult, right? Like that's what we do every day. We have many experiences.
Wow.
We have a full resource of experience. Um, this is just a graph that I want to show. This is how cash value keeps growing, even though you're using some of it for your loans. These are the loans. Sorry, I had the arrow on the wrong side.
No,
Here are
these
the
are,
loans,
yeah, absolutely well put in.
and
Great,
this
man.
is the cash value. I mean, this is a graph that gives you the power that it has of growing over time. And obviously, it takes commitment. It takes like foresight, and you have to sort of give trust to the financial advisor that this is going to work, and it's being put into place. It's been done before. It's not that it's not being done. It's not a new undiscovered thing. So yeah, just to summarize it, we have seasonal cash flow does not have to equal seasonal stress, meaning
Yep.
that
Like your
if we
friend.
lose our income, no stress. I can sleep at
No
night.
stress.
I can even take vacations at this point. It's like, what's the point?
Yeah.
I can take my
Yeah.
whole staff on vacation.
I'll go to Mexico for 2 months when it's raining
Yeah,
very hard. Thing to do.
yeah,
Let's go to Mexico.
yeah. And then they say that you're better, you work better after a vacation. And then imagine your staff. You take them out on a cruise, for example, and
Ha ha.
that you loaned off of your cash value, and then you come back, and then guess what? Next year, if we guys make good revenue, we're going on a cruise
They will
again.
they will ensure it. They will ensure it's a good revenue. How many farms have you seen that their workers are going on a cruise ship, even if it's for a
Yeah.
week?
How many
Look
farmers
at
have
the
you met on a cruise ship?
no one. And this is the next level. We have to treat farms like corporates only now. How corporations basically give their their employees a kick. They introduce these trips and everything. You take them first without telling them if it's a good year through your cash value. Next year, you will double down on your profits. I am damn sure on that part. You double down on your profits.
Oh, for sure, for sure. It's not just the equipment, right? It's the work hands, the many hands, happy
Yep.
hands, and then they'll love their job. So yeah, like what we talked about, repay for peak seasons revenue. Whenever you're at peak, put it into the banking system, and then it will keep compounding uninterrupted. You control your yield, which is with you control is better than the yield that you're gonna have.
Absolutely.
Let's go to the next slides. Okay, well, we are 8 minutes away. Let's see if we have any questions on our comments and questions. We have no questions today.
No
What
worries.
what would be a frequently asked question, hey, Gaurav?
Uh, Most simple thing is how should I set it up?
Oh, you're
It's
giving
like,
away next show.
yeah, that's the most common question, and we'll answer next time. Second one will be like pretty much it's around the process and authenticity of this banking system. Because again, there you're saying that you have to buy a policy and then you do it. Just letting everyone know on the show that these systems are older than few of the international banking systems like RBI, for let's say. So in North America, whole life and infinite banking system is there since the money is there. So
I I
you,
got a question.
yeah,
What would happen if you skip a premium?
nothing will happen because you can take a loan against the premiums and then pay it off. Simple like that. Or
That's
if you
it.
have if you
The,
have skipped it, what? Sorry.
oh, I was just saying that there's so many possibilities there.
There's so
Like
many possibilities.
like
Let's say
and
there are two parts of it, two parts of payment. Like one is your loan payment, other is your premium. So let's say you already took a loan and you don't have to pay for that year. It's okay. You don't have to worry about that. And if it's a premium payout, that's why we plan few policies which are like pay 10, and we can close it in pay 5 or pay 6 as well. That you have to
yeah,
pay only five of those. premiums. That's it. So the faster you get these paid off, you don't have to worry about repayments of premiums and the loans both. That's the beauty of the banking system. And you can create multiple, like once you have more money, like coming years, instead of putting all money in one policy, one person, you can do it like you mentioned on your son, on your wife, and then you can use those as well. It's not like
Yeah,
only the person who has the name on the insured will use it. It's the owner or the, so owner and insured can be different in the policy. So your, even you can get it done on your key employees as well.
that's right.
Let's say
Or
you have
anybody
key
that you have financial interest with.
interest or financial importance, who is like asset to your company, like who's growing your business, like what we are seeing here, that what is growing your business, an asset. So employee is also an asset. If you find an employee which is worth doing it, you can make it. So once something happens to that employee, your business don't struggle. You have enough money to cope up with that financial stress, or hire a better uh, resource or asset for your for your business to go on. And we are talking here about like big scale farms, where you actually see managers and farm managers, and they're like different multi-level management going on, especially in the vineyards. So vineyards have, like, I've seen the brewing section will have different managers, the sales
Yeah,
will have different managers, then your production will have different managers. So with that scale of companies, they can adopt this system. So anything happens to your asset, you create more money out of it. And it's like, oh my god, I would have, what if he left? Let him leave. You're the owner of the policy. You don't have to worry anything about it.
that's
Technically,
right.
even if you own the policy, you can
You
stop
still
it and
own
you
the
can
flag.
withdraw all the money.
Yeah,
Simple. Or worst case scenario, you can get, you can surrender the policy and get the whole cash.
that's right. You can still get your cash value.
Yes.
Yeah, yeah. And so it's there's so much flexibility. There's so many options. Like and we can write many books about it too. Like it's like there's lots of books out there to explore this, and a lot of case studies. And so far, I have never heard anybody that had a bad experience, unless they're not they. You have to have the discipline concept first installed, and that goes back to taking the peas out of the back door. Because once you own it, like you were saying, once you own something, you feel like you have the control, but then you can extend that control and actually ruin it, like by not paying it back, by not setting it up like a banking system and just a loan system. Oh, I just get it out. I don't have to pay it. It's my money. But the power is within the repayment. It's the regrowing, because you want that cash flow to keep becoming positive instead of negative. And you're also participating, you're contracting with other people's. So you don't want the pool of money to decrease. You want to take out of it in need and use that, whatever. That's why it's so important to buy an asset, because if you buy an asset, it will produce money. Don't buy liabilities, because if you buy liabilities, they're just a cash drainer, right? And we can show you how the difference between the two, because a lot of people don't even understand what's an asset and a liability. I had a struggle about this one question. It was like, is a house that you live in an asset or a liability?
It depends on how you use it. It's a
That's
very
right.
how you use it. You use it as a house, like Warren Buffett has mentioned, a house is the worst investment you can do in your life.
That's it. So,
So
um,
make sure is that decision is good or bad, as per like what your finances say. And sometimes the great American dream includes having a loan through a bank, working in a job, have a house, repay it for 25 years, keep upgrading yourself, and you're tied up for your whole life. And
yeah,
Warren Buffett guys like these, they live in small houses, they live well, they don't own anything, they have pretty much smart investments and all this system. That's it.
Yeah, they buy houses or they buy investments that are producing. Like Warren Buffett is big on dividend. It has to pay me something, and he
Yeah,
made
he
all
has
his
big.
money. Surprisingly, he made all his money in insurance companies. Why? Because then he gets a big pool of money where he takes it and he invests it. He is investing other people's money. That's the power of taking that money that you have in your bank and investing it into assets. Once you have, the creativity as farmers, once you have that money and that backup, and that discipline, you can do anything, right? So I want to leave you today with my quote. When you manage money like you manage your crops, with patience, care, and consistency, you'll reap abundance season after season. So next week on Farmers in Finance, we're going to go into episode 9. Wow, we're already at episode 9. How to structure your first policy the smart way. So we're going to understand policy designs, and we're going to do a little bit of a comparison between all life and term, or how to
Yeah.
blend the two, how to budget for premiums, which is very important, where we're going to look at your finance background, your cash flow. Obviously, it has to do with farms, and how to set up loan repayments, just like you would, like writing contracts with yourself. And then we're going to show you how to turn your first policy into your family bank foundation. And once you get started, you won't stop, just like a chip. Right, Claire? You have anything to
Yes.
add?
No, we will just try to simplify it as much as we can. Sometimes when we get excited and we try to understand, it's become difficult to understand with that emotion. We'll keep it
Yeah.
as simple as we can. And there will be things we will be telling in next episode, what to take care, what to basically have in mind while having these banking systems in mind. And we'll try, maybe in this episode, maybe next episode, we'll try to compare it with different other tools of savings or investment, like RRSP, TFSA, loans, and compare them like in real numbers, like what you lose, what you get when you have these kind of banking systems. So yeah, so I'm excited for the next coming episodes, because we'll dig deeper into the concept, into the numbers, and we'll basically simplify it to the last binary digit, so people understand, like they talk about having food, they should be that much confident while they should talk about infinite banking system.
Yes. Yeah, where it comes from and everything.
Yes.
Well, thank you for watching today or in the future. I am Rico, and my co-host here is Gaurav. This was
Thank
Farmers in Finance. Until next show, stay tuned. Thank you very much. Bye,
Thank
everyone.
you. Bye.